Welcome to Stu-C TV, friends. So this is going to be a doubts clearing session. In the live class, students often get confused between terms like accrued income, accrued expense. So this word accrued always confuses them. Then there is prepaid expense, prepaid. Then there is advance from suppliers, advance from customers. So these are common terms which leads to confusion whether the item should be classified as current asset or current liability. So by the end of this session, you will be clearly able to identify which items are current assets, which are current liabilities. We will do a checklist that what questions you should ask before classifying any item as current asset and current liability. So that is our goal for today. Let's start. The golden rule is 1 year timeline, 12 months. So the starting point is always whether that transaction is happening within a period of 12 months. Only then this word current will come into play. So the current word itself will indicate to this short term, that is 12 months period. Now the next question, whether the item in the balance sheet is a right or future benefit expected to be realized from it. So whether that item will give the business any rights, is it giving it any rights or future benefits or future resources for the business which it can make cash from within 12 months. So that is the first question. The next question is whether it is an obligation, whether the item is creating an obligation for the business which the business has to be settled in 12 months. So you will always hear the word, you will hear receivable, then you will also hear a word payable. So these are common terms. What is receivable means you have a right to receive. So it can be goods, it can be cash, or any future benefits. So that is the question. If it is receivable or rights in nature, it will be a current asset. If it is an obligation, if it is a payable item, which is owed by the company, it can be a money, it can be some rights, or it can be goods, which is owed by the company to the customer or some other party. So then it will become a current liability. So this is the golden rule. You have to always. Now let's continue with our items and we will see each item and see how it is a current asset or current liability. So current assets, we already said it is a resource, future economic benefit within 1 year. Okay. So the business has a right to it. It can turn it into a cash. So it will be converted to cash or used up within 12 months. So that is the basic definition. Now, accrued income. The first confusing item, accrued income. It is like an IOU. What is it? Income earned but not yet received in cash. What is an example? Suppose you are a designer, freelance designer. You have completed a project and send the bill or invoice to the customer. So your work is done, money is earned, bill is generated, but cash is not received in your account yet. So obviously you have completed the work, the service is delivered, but you have not got your money yet. So it will be classified as accrued income. Accrued means the service is delivered, goods is delivered, but you have not got cash in the bank account. So it is an income that you are expecting in the future, in the next 12 months. So that will always be a future benefit. As the checklist, we just decided what is the checklist, whether it is a right for the company. Yes, for this person it is a right to get that income in future. So it will be a receivable, it will be a receivable, it is a right. So as per that checklist, it is a current asset. It represents right to receive cash and it is expected within 1 year. Already work has been completed. Okay, similarly, you can think of bank account FD income. So FD interest may be accrued, but you might not have got it in the bank, your SB account. For example, maybe your FD interest, you get it in every 6 months. So you will get it either in December or June. But in the remaining months also, your income is getting accrued. Every month, some interest is accruing, but it will be credited only in that half yearly period. So again, that is an example of accrued income. Such incomes will be current asset. Now, prepaid expense. Again, the checklist. Expense means you have paid for an expense which is going to happen in future. You have paid money upfront. You have paid cash today, but you will receive benefit or service later. So again, you have created right to future benefit within 1 year. For example, your car insurance is an example. You have paid cash, you have paid premium, but you will receive insurance coverage over next 12 months. So the product or service will be available to you over entire next 12 months. You will not get everything for today. It is for next 1 year you are paying that premium. So it is a prepaid expense. So it is an expenditure which will be covered throughout the year. So that kind of paying for future benefits, again, if you look at the checklist, it is a right to service. When you're paying a premium, what are you saying? You are telling the insurance company that now I have a right to the insurance for the next 12 months. So that category is that will be classified as current assets, prepaid expenses. Advance to suppliers. Now, suppliers business is getting raw material from a supplier. Now, the business pays the supplier before receiving goods. So, supplier will deliver materials later, but the business has given an advance payment early, starting. So, we have seen that advance to suppliers has created a right to receive goods. When you have given advance amount to the supplier, you are saying that now I have given you money, but I have a right to receive goods from you. So it has become a right for future benefits. Hence, it will be classified under current assets. Okay. This is the summary table. Accrued income means you have right to receive cash soon, or income it will credited in your bank account soon. In so future benefit, again, prepaid expense, you have given an expense in advance, you have paid for it, because you will get a right to receive service soon. Insurance premium example. Advance to suppliers, you have paid supplier, you will now have a right to receive goods. So the keywords are rights, receivable. If you see these kind of meanings attached to your item, then it will be classified under current assets. Now let's look at current liabilities. What is the business owing to others? So what business is liable for obligation in the next 12 months? Okay, within 1 year, what obligation or liabilities it has to settle? It can owe goods, it can owe services, it can owe money, it can be anything which the business has to deliver in the form of goods, money, or any other uh, contract which it has to fulfill. So that is current liability. Accrued expense. Now let us, using our checklist. So it is an expense. So whether it is a right or obligation, that is the first question. It is accrued expense. Accrued means you have not paid the money. It is an expense, that means you have to pay money, but you have not paid for it. It is accrued. It is due for payment in future. So you have used the service. For example, electricity connection in your home, your bill is generated bi-monthly. So after 2 months, you will be paying for the electricity which you are using now. So it is for due in 2 months. So you have already used service, so that means you have created obligation. Have you created any right? No, because you have already used service. You don't have any rights now. So that service provider, he has the rights to collect. So for you, it is an obligation, so it becomes a liability. And since it is to be settled within 12 months, it is becoming current liability. So this is how you look at items and classify. Again, unearned revenue, cash for future work. Advance, it is also known as advance income from customers, advance received from customers. Customer has given you a big order money and advance. You have not given him service or you have not delivered any goods. Customer has paid you for future service. Now work is not completed yet. You have to do it in future. So what is happening here? You have created obligation. You don't have any right now. You have created an obligation. For example, a venue is selling tickets for a show. It has cash today. It has collected tickets, but the ticket holders owe a performance. Now they have to deliver the performance in the next month. You have already got money from sale of tickets. So this is unearned revenue till the service is completed. Till the performance is over, it is unearned revenue. It will be considered as an obligation, and therefore it will be current liability. So I think now you are clear about classification. This is the summary. Accrued expense means obligation to pay cash. For example, that electricity bill you have to pay soon. Unearned revenue, you have got advance money. You have not done the job yet, so it is obligation to provide service. So obligation must be fulfilled within 1 year. It is current liability. Again, another confusing term, prepaid expense, unearned revenue. Now, I think you are clear. Prepaid expense means you have right to future service. You have paid advance payment. Unearned revenue means you have received cash, obligation to provide service. So it will be liability, current liability. This will be an asset. So this is the quick question you should ask, whether it is right, whether the item shown in balance sheet, is it a right or it is an obligation for the business, and whether it is to be settled within 1 year. Based on that, you will categorize it current assets. All these are current assets and current liabilities, and then common confusion we have discussed. I hope by now you are clear about this distinction between current assets and current liabilities. Thank you.